Good morning, everyone. This is Gary from Apex Pro Group. Good morning. This morning, I wanted to go over how we use the dash, and I just want to check that I'm sharing the right screen. Let me stop sharing 1 sec. And share the screen again. So share this one. So yeah, good morning. So this is our dashboard that we have, and I just wanted to go over this morning the common features of this dashboard and explain what they are and what they do. So without further ado, let's take a look. So across the top, we have our columns, which are all got little abbreviated titles. We have our minimize button here. So if you want to do analysis, you can make it small so that you can see most of your chart, which I quite like. Here, this up and down arrow tells us if the peak is locked and to the direction that is locked from the H1 cycle. So this one would tell us that the 1350 moving average is locked to the downside. And then the following column next to it is PF for peak formation. So for example, here we have 2 peak formation high. So on the first day, if the peak locks on that day, then it would have said 0 peak formation, 1 peak formation, 2 peak formation. So the 2 is the number of days since the high or the low, and PFH or PFL is peak formation high or low. So that just tells us what kind of cycle we're in at the moment. When we're around the level 1 area, sometimes this may change to peak formation low if price reverses on itself and goes back beyond the peak kind of thing. So that can happen when the market resets, which cannot be helped. Once it's settled, this will identify the correct cycle and show you, because it works on live data. So for example, this daily close column is the next one. This one's blank. So what it basically does is it say this day here had a range from here to here. The algorithm splits it into, I think it's like thirds. So if it closed in the sorry, you get the idea anyway. So if it closes in the upper or the lower third, it would show down or up, indicating that the trend is still strong at that current time when the previous day closed. So it's just telling us that the previous day closed high or low. If it's blank, then it closed somewhere in the middle. So let me get rid of that. Delete all selected. Okay. So many things you can't always. Okay, so delete all selected. Okay, so max is and real time. So these relate to how far in the cycle we've moved away from the peak high or peak low. So you also have these markers on the chart showing us 1 ADR, 2 ADR, and 3 ADR, projecting where this cycle may go to based on the average daily range. So the max is telling us that so far since this peak high, it's been 2.17 ADR, which was just here. So we're very close to that now. And the real time is 2.11 ADR. So a typical cycle we expect to be 3 ADR. So traditionally, a cycle of 3 ADR, 3 to 5 days, 1 day per level, 1 intraday cycle per level, etc. So this can tell us if we have a strong trend. If these two are very close, it means that obviously this is still at its furthest point. If it's overcooked or whatever, if it's beyond 3 ADR, then you may be looking for some kind of reversal. So yeah, this one obviously has the potential to go lower according to what we're seeing so far. So the other thing as well to note is that the average daily range. So the average daily range of this pair is 89. So that means that each day it could potentially move 89 pips, which is about that, which is the same as what the lines mark, you see. So you cannot, sometimes you can mark them with a box, or you can use a trend line and make it 89 pips or whatever you want to do if you want to use ADR. Remember, the ADR is like a guide. So that can help you identify some of the levels you're in by like putting it on and seeing where your stop hunts and drops are and stuff. But often they do compacted little levels. So practicing spotting the pattern can be another skill in itself. Okay, so those are 2 methods of measuring ADR. So from your stop hunt up and pulled back, then that can help. So the ADR, if you look at the ADR and the daily range, the DR, for example, this pair is already from the start of the day, it's saying has moved 63 pips. So we could possibly see price come down a bit lower to complete its ADR. That would be what that would indicate to us. But this is our stop hunt and the move that broke our structure. So you can also measure from there to there and say, well, that particular move might have already completed an ADR. So the other next thing is be best to cover these 2 first. So the ADR and the daily range. So if the daily range exceeds the ADR, then they're either going to do more than 1 level in a day, or price might be like overcooked for that day and you may be seeing signs of reversal. So that's worth bearing in mind. Now the stop hunt feature is quite useful. So around London Open, when you see the Asian range printed on your box, on your chart, sorry, the box, if price goes either below or above here by, I think it's like 10 pips, then you'll see numbers appearing here. It just means that price is either above or below it. When price is pulling up above it, You see the 200 or 50 EMA of H1 here. You see an M formation. This could be the start of your intraday pattern. So this could be the setting up of a type 1 or type 2 London pattern, because type 1 happens off the top of the box, type 2 normally happens, sorry, type 1 happens above off of the M15 200 EMA. So you could switch to M15 and see where your 250 EMA are, and try and establish what kind of London setup you have. Yeah, so if anyway, when price goes above or below the Asian range, that will often show you the that prices stop hunting. But the important thing to note is, obviously, as I said last night, we're looking for stop hunts above the Asian range to sell, or in a peak formation high situation, or in a peak formation low situation, we'll be looking for stop hunts below to buy from. But the other thing is to make sure you see a clear anchor point on the M15 before you jump in and buy or sell, because price might not just be stop hunting, it might keep going. So that's just to give you like a heads up. Divergence, it's said in BTMM that when we have it's in level 3, that we get divergence, and it can be a sign of reversal. So example here, some of these have exceeded the 3 ADR and they have shown divergence. So let's have a quick look, see if we can see that. The only problem is, so yeah, this little red line here showed that this was making higher highs, but this was making lows here on the TDI. So this was a sign that things were kind of changing. So this one here could be, once we start to see a clear M and stuff here, we could look to possibly sell this if all of our other analysis agrees. Okay, so let's take a look at something else. These here are our breaker columns. So these haven't been used a lot lately, and we are updating the order blocks to have breaks of structure in them. However, there was nothing wrong with these. They work, and they were kind of to help show us what the current structure of the market was and whether we're still in that. So the first columns, breaker 1 and breaker 2, these can be turned on and off by clicking on the cell. Let me just cover these last 2 bits first, and then we'll come back to these. So breaker 1 and breaker 2, turn them on and off here. Like when you click on that, you just click on this bit. Yesterday's high or low, a lot of trades take place off of the previous day's highs and lows. So this will show us if the current candle is at the previous day's highs or lows, like GU. The previous day, Friday, the low was here, and obviously you can see price is currently there. So if you're expecting a buy from here, then that could also be a nice like signal to consider looking for a lower time frame W to buy from. We can also see that the EMAs are really spread out. We're over 2.5 ADR, so it'd be worth counting your levels up here and seeing if you wanted to look for some kind of reversal. We've had 1, 2. We've had like, we could have some more drop here because we've only had like two real days. Maybe in New York, we might start to see a W pattern forming. and see some movement back to the other side or tomorrow. So that's what yesterday's high and low is about, when price is close to here. So like in a W formation, let me just get the annotation tool. So generally a peak formation is over 2 days like this. Not all the time because it's a W. So obviously this first day, this would be the low, this would be the high, this would be the end of the day, this would be the end of that day. So you would hope that somewhere around the low of the next day, we look to take the second leg entries that might begin from the low of the previous day or somewhere, but just around it. Just remember, often they spike these lows to take out the stop losses before shifting up or shifting down. But that can just give you a nice indication to be watching that pair. So let me just clear my drawings. Okay, so that's the yesterday's high and low. TDI, if I jump over to M15. M15. So TDI, let me find an example of where that would have shown us something. So, okay. Just turn off the auto scroll. So this TDI would light up with up or down in this situation. It needs to be checked manually, but it gives you the heads up that a W or M has probably been formed or is forming on the M15. So let me try and draw. So here we have what's known as a shark fin. So these blue volatility bands are like water, and then the shark has stuck his fin out above or below the water. So this is known as a shark fin. So price made a shark fin, the price line of the TDI. And then the green crossed the red signal line. So that is another sign that price wanted to move up. And then the price line crossed the market baseline, which shows us the slower trend of the market. So at this point here, this would have lit up. I think it's up or an arrow, one of the two. So that would light up there, and that would give us the indication that we've either made the first leg of the W and we're going to come back and make the second inside the band, or it would show us that we'd made the W and then we're going to do a MBL bounce and carry on up. Obviously, this would be of more interest to us if we're also in peak formation low. So all these things kind of need to marry up. And obviously this part of the dashboard here is more concerned with the current cycle, and then a lot of these other parts are more concerned with like entry confluences and stuff like that. So let me clear those, and let's just minimize the dashboard a second and see what was going on there. Can't actually see. So yeah, so here we had like a nice low here, nice low here, and then price went all the way up to here. So yeah, that obviously helped identify that somewhere around here. And then you could have waited for this little MBL bounce, and then you probably could have bought this part here, which would have been okay for a small scalp. Obviously, these want to align with your cycle that you're trading for higher win rate. So obviously, it could have probably made a quick 50 pips there, which would have been nice. So a lot of these things are built on the basics of the market makers, beat the market makers strategy. And which ones you choose to use are up to you. I mean, with the market makers method, there's lots of indicators to help us identify where we are. But as you know, reading the pattern is the most important thing. And confluences, indicator-based or structure-based, whatever you wish, will assist you in confirming your decisions. So let's take a look at the breakers. When I turn these on, I'm going to get lots of pop-up boxes, I think. Yeah. Okay, so this will tell us, this is updating obviously at the moment. So let me see. So here on M15, we can see that the current market structure is bearish, which agrees with the break at M15. So let's have a look here. Zoom out. So this, I think, is the H4. Yeah, so H4, we had a big, this is all one big H4 candle, you see, this blocked out section. So price came down, and this represents the last big H4 candle, which is also to the downside. So until price closes above this great big H4 candle, then this will remain red. So it's just telling us that we're closing below the opposite order block candles, the last green candle, I think, on the H4. So until anything closes above it, it's still a sign that we're moving downwards, you see. So this first column is the current time frame that we're in, and obviously this one is the H4. So if it's bigger than the other one and darker, that's likely is your H4 breaker. That shows where the first, I don't know what, I can't really call it breaker structure, although there is breaker structure, the last opposite candle that got closed below at this point here, where we also have the peak formation, started from here, and then it's broken another opposite candle of the H4 and continued to move down. So this is what this outline is of. But the breaker is the first one, and this would be like our continuation order block, which if it's closed the other side of would become a bullish breaker. So it just gives you like a confirmation that the trend is still going that way. Obviously, this is going to be a long time to react because it's from the H4. So we also have the M15. So after that, we had the breaker of the M15. So this, let's turn that one off. Put the auto scroll on. So here at the moment, we have the this M15 breaker was created, and then the last bullish candle here is marked with this little wireframe box here. So at the moment we're making bearish structure. If price closes above this one, it will show us that in this particular time frame, price is retracing possibly towards this area here or further up. Can be an early sign of reversal or sign of a pullback. So you need to combine it with other things, but it can also help you if you're not sure about the levels to confirm direction in the longer term and the shorter term, which I think is quite useful. Okay, I'm going to turn those off. And then yesterday's high or low we've talked about. So the TDI, I don't think I really explained it so well. The notification or the dashboard looks for those three things. So price coming out the band, shark fin, price crossing over the signal line, and then the price line crossing the market baseline. So all these things kind of need to align, and then you can make your decisions. Another thing I wanted to say about the dashboard is, so this part of the dashboard here is primarily for identifying safety trades, which a lot of people seem to confuse. So because obviously the market can reset and stuff like that, sometimes the algorithm will switch from peak formation high to peak formation low when that kind of setup thing occurs. So after that, after the peak has been formed and price moves down, it's going to take a while to establish itself, and we'd look to pick up a safety trade around here. So obviously the dashboard has to calculate this, and we look to enter once the peak has been confirmed and trade these parts of the cycle from here to here. And that is kind of what the dashboard is going to show you. So you want to be entering on pairs that are around 1 or 2 peak formation normally, and with an ADR of around 1 in real time and max. This will hopefully get you into and allow you to find some nice setups with a clear peak, and then you drop down to M15 to find your London pattern. However, if you look for pairs that have overextended their ADR and highlighted, that means that they've moved free ADR down from the previous peak high, and you see the divergence and stuff like that. This can give us the heads up that price is starting to turn. And then maybe you see a sort of breaker in the lower time frame in the opposite direction. This could allow you to enter before this point and maybe get in on the second leg somewhere around here. Also, if the peak, so the peak has locked, this one here has also change direction, that would get you in earlier as well without having to wait for this pullback probably the next day. But if you want the safest entries, then this safety trade is probably a good one to go for. But if you want to use these other confluences for taking the swing trade from the peak, then some of these confluences on here can be very useful. You can look for discrepancies between the max and real time. If one's tapering off from the other and they're highlighted and exceeded, then that can be a sign that price is starting to move away from the peak, which might be a peak low, so price might be moving up. So you want to look for a second leg W or whatever, and then you could use your other confluences such as the peak unlocking itself and locking itself in the other direction, or you maybe use a 513 cross, or you use a second leg railroad tracks, or evening morning star pattern, or a shift candle. So those you could also apply here, and look for the divergence, look for opposite breaker in the lower time frame. But just be aware that the W's and the M's are normally a multi-session pattern. So it pays you to be patient and look for those second leg entries, or a clear break of structure and move to the upside. Because obviously sometimes patterns are an A top or a V bottom if the dealer doesn't want to come back and give you the second leg. So yeah, it's really basic with picking up for, say, the safety trade, which is a little bit more confirmation. So just be aware of resets around this high. If this stop hunt progresses too far up, then you might not want to take that. But if you get a nice pattern on the M15 around the one peak formation and around the one ADR, then look for your London pattern on your M15 to trade level 1 to 2 and level 2 down to 3 the following day. And those can help you use the dashboard. So those are the two kind of key ways to use the tool. I hope that has been of interest to you, and I think tomorrow we're gonna take a look at the dashboard, not the dashboard, the trade manager, and how some of the stuff works on that. I just wanted to go over a couple of other useful things while I'm here. So when you're using the licensed version from us, and you have a subscription, then when you add your indicator to your platform, it will speak to our database and check your account number and your expiry date. Those will display in this top left corner here, and yeah, that will tell and let you know that you've connected with our database. And for the software to connect with our database, it's very important, if it's not working, one, to check that you've obviously made your renewed your subscription, and then check the date on it. If you do see it, make sure that that's in date. And then the other thing is to go tools, options, expert advisors, and make sure that you've allowed the DLL imports here. And that should make you make your software work. If it doesn't, then you can contact me and I'll check it for you. If you want to change account numbers, you can do it from within the customer portal. You can find, I think it's under your account details, there's like a bit to reset the disk name, because obviously the software reads your hard drive serial number, and you can often change your account number from there. We've had a couple of blips with that where it hadn't, it kind of disappeared, and I had to get the programmer to add it back there. So if you ever find that you can't do that and you want to renew your, you find that you want to renew your, or change your account number, then contact me and I will do that for you. Just quickly, so CAD CHF has gone, I think, above the Asian range 10-11 pips. So yeah, so here is an example of that. The Asian range and price has gone above that. So we might be looking for an area now to, if we were looking to short it, we'd be looking for some kind of confluence as to to confirm our entry to the downside. But it looks like we're forming a little pattern up for a bit, so we might be pulling up quite deep here. Let's wrap up here anyway, guys, and contact me if you have any issues. And like I said, tomorrow we'll look at the trade manager. So thanks very much for joining me, and take care. Have a good day trading. Remember, it's Monday today. Take your time, wait for a clear directional bias and trade with low risk, and make sure that you confirm your entries. Thanks, guys. Take care.